What's up, traders? Just want to take a quick look at Alibaba. Before we get started, just remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so here we've got the Alibaba daily chart. But before we take a look at the technicals, I just want to jump in here real quick and take a look at the fundamentals. So Alibaba's got $224 billion market cap, 235,000 employees. It's not a perfect parameter of the Chinese economy, but it definitely gives us an idea of what's actually happening in the Chinese markets. And if you've been sleeping under a bridge, maybe you don't know what Alibaba is, they're a leading provider in Chinese technology, infrastructure, and commerce. And if we see down here over the trailing 12 months, they have a price to earnings ratio of 20 to 1 and a price to sales ratio of 1.67. And historically, looking back over the last 5 years, it's pretty much average, maybe slightly down. So we can see that their revenue has been consistently rising about 30 to 50% in the last few years. But it seems to have plateaued in 2021 with a slight decline into 2022. The profit margin has been averaging over 20% until we got into 2021 and we saw a sharp decline down to 7% and then 8% in 2022. So obviously a substantial decrease and worth paying note to. All right, I've had about enough of the F word for today. You can take a deeper look on your own time. Let's take a look at these technicals. So this thing peaked in late 2020 at about $315, and with the current price down here below $80, it's currently trading down 75% from its all-time highs. And if we just switch over to the weekly real quick, we can see that after almost a decade publicly traded, it's actually returned a negative 16%. So if you bought this thing on day one, wrote it down, and then wrote it all the way back up, but never sold, you're actually below your initial purchase price. And when this thing cratered back in the end of 2022, it nearly took out its all-time low. All right, so here we are on the monthly, and we're going to work our way backwards. We'll go ahead and switch back over to our candles, and we can see essentially once this 821 bull cross took place in August of 2016, this thing went absolutely parabolic. And with the exception of a little scare here back in 2018, it wasn't until the bear cross actually took place in July of 2021 that I got extremely bearish on this thing. And after that 170% increase, that would have been the perfect time to exit. Once that 821 bear cross took place, this thing has literally gone straight down. From when the 821 bear cross took place, it dropped another 75% and then had a dead cat bounce back up here, got above the 8 and then retested the 21 where it promptly got rejected and then lost the 8 once again. And now it looks like it's headed back down here to retest the lows. And if we turn on our indicator oscillators, we can see with the TD MACD that we had all red histograms. We started to show some signs of life here with these green histograms. But if I had a guess, I'd say over the next couple of months, these things are going to flip back red and we're going to retest the lows. Now that may present a long-term buying opportunity if we do see some bullish divergence develop. So we'll definitely be keeping an eye on this. It's also building up momentum on the Jewel Thief. Did get a hard buy signal, came out of the bearish control zone and did have a nice move back to the upside. About 100% bounce. But now we see the knife is starting to fall back down below the blue slope and definitely giving off some warning signs. So if we go back down here to the weekly time frame, we can see the peak. We can see once we lost the 200 exponential and simple and they flip red, again, all we saw was just straight up meltdown, which is exactly why we use those. Because once we lose a long-term weekly bull trend or bull market, the last thing we want to do is just hold and hope for the best. So we can see here that once the 821 had flipped bearish, it basically went straight down. We had one little quick attempt to cross it back bullish here and then failed and went to new lows. We then saw an 821 bull cross right here. And since then, we've been trying to hold that bull cross, but it's not looking good. And if we were to close this weekly right now, which we're one day away from, we'd be closing a new low. So if we have a high here, a low, a lower high, and then a lower low, that's confirmed back into a short-term downtrend. So we basically had a disgusting bear market, a dead cat bounce, and now it looks like we're ready to continue the move back to the downside. So what I look at is this essentially as a relief rally before the actual move continues to play out. And we can see here now that we bounced the first time off the blue slope line on the TD MACD at weekly. We bounced it again here, and now we're threatening once more time. And now that the histogram is below the slope line, if we stay down here too long without reclaiming those levels, it's going to flip the slope line back red and probably retest the lows. Stochastics are still aggressively angled to the downside, and while the blue tried to move up here, it clearly got rejected and is pushing back down, getting ready to enter back into the bearish control zone. So when I look at this thing on the monthly and on the weekly, it's very, very clearly still in a bear market, in a bear trend, and probably sees much lower prices going forward. That being said, if you're some sort of amazing circus performer and you're great at catching knives, maybe this is the one for you. But for me, it's a big no thanks. If we switch over here to the daily and we just take one more look, we can see pretty clearly it's telling us the same thing that we saw on the monthly and weekly. We entered into a bear market once the 200 exponential and simple flip bearish. We came down here, we back tested it once, got rejected, came down here to a new low. We got back on top of it. And when we came back to retest it, this is the crucial area where the market decides, are we going to go back into a bull market or are we going to see a resumption of the bear? And in this case, when we came back down to 200 exponential, it did not hold. We came down to 200 simple, it did not hold. We did put in a higher low and then we bounced back up here. Unfortunately, we then put in a lower high. So now we have that high, we have that low, which is higher than our macro low. But this is basically just a consolidation and it's looking more and more like a descending triangle. So when we see a descending triangle after an aggressive move to the downside and then a reflex rally to the upside, this looks like a consolidation or a redistribution before we go lower. So every time we test the lows, we come back down to that same level. And every time we test the highs, we get a lower high. So it's just a matter of time before the order books run out of buyers at this level and we break back down and retest the lows. So there was obviously a big narrative about China reopening and how this was going to drive all this demand and it was going to reignite the economy worldwide. And the truth is, it's just not happening. Obviously, this is no surprise to you guys if you've been listening for any amount of time. I've been extremely bearish on China the whole way down. I was bullish here on that quick bounce and I'm bearish once again. And the truth is, if we look at some of these other big name Chinese stocks, most of them are looking pretty gross also. So what does this mean? Is this some secret indication of the overall weakness in China and we're sitting at the poker table and just got a flash of their cards? Or is this just one company not doing well? So while I don't necessarily think that Alibaba is the perfect parameter of the Chinese economy, it's worth paying attention to. It's an over $200 billion company with over 200,000 employees. And when I look at the technicals and I look at the fundamentals, things just don't look good. So does that mean I'm not interested in China and there's no money to be made? Of course not. But you guys know I'm all about probabilities, not certainties. And the probabilities are, as long as we're below the 200 exponential and simple on the daily, as long as we're in a bear market, especially below the 200 exponential and simple on the weekly, or in a bear market on the monthly, the last thing I want to do is be trying to pick bottoms on this thing. So sure, is investing in Alibaba better than investing in some company that doesn't even make money? On paper, yeah, but it's still trading at a relatively high valuation. And the actual stock price itself is probably reflective of some underlying issues in the economy and in the markets, regardless of whether or not we like it. So yeah, that's it. Just want to take a quick look at Alibaba. It's obviously in rough shape. There's been this huge narrative going around all year about how the Chinese consumer was going to reignite the economy and we were going to see the same kind of goods and services spending that we saw in the United States when they came off of their lockdowns. And the fact of the matter is, it's just not true. It's not happening. And a lot of us saw that it wasn't going to be happening. The Chinese economy is far different from the United States economy or the world economy in general. So even if they did see an initial surge in goods or services, travel, whatever the narrative was, we know obviously because of the fundamental differences in China and other countries around the world, specifically the United States, that the probability of seeing a similar or same reaction was as close to zero as it gets. So yeah, that's it for today. I just want to take a look at Alibaba. Please remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. If you enjoyed today's video or the other videos, make sure to like and subscribe. Crypto Trend Trader, and I'll catch you on the flip side.